What is up, guys? Taiki here, and today I wanted to continue my book review series, this time with Trading in the Zone by Mark Douglas. So let's get right into it. And with these book reviews, I'm not claiming to be a trading wizard. In fact, I'm not. I'm literally trying to improve personally as a trader and investor. I'm just here to share some personal takeaways as it relates to the crypto markets because that's what I do. I'm a full-time crypto person, right? Trader, investor, researcher, and some interesting excerpts that I thought was helpful that I wanted to share with my audience today. So this book, written literally in 2000, has over 8,000 ratings. It's been recommended to me by dozens of people. And Douglas is a successful trader, and he uncovers the reasons for lack of consistency and helps traders overcome the ingrained mental habits that cost traders money. He takes on the myths of the market and exposes them one by one, teaching traders to look beyond random outcomes, to understand the true realities of risk, and to be comfortable with the probabilities of market movements that governs all market speculation. And I think that's a pretty good summary, but my personal, quick takeaway summary, whatever you want to call it, is that the best traders, they're detached from the markets. They view each trade as independent to others. So if someone makes money on a trade, it doesn't make them overconfident in their next trade. Or if they lose money on an individual trade, it doesn't hurt their confidence. They just view everything independent to others, right? This is numbers on the screen. The best traders think in probabilities and don't try to project their opinions on the markets. And in crypto, there's so many people that project their opinions. It's like, okay, like I think that this is gonna happen, so I will buy. Okay, like you have to think in probabilities. You can't just be like, oh, I like this coin, I'm gonna buy. I hate this coin, I'm gonna sell. I don't like this coin, I'm not gonna buy. Obviously, from an investment perspective, it kind of depends on your time frame. But let's kind of talk about everything later in this video, right? And one example is like revenge trading. Okay, the market is wrong, I'm right. Right? This is literally trading your opinion. You're in the market to make money, not to be right. Right? There's this very famous, quote that says, "Would you rather be right or would you rather make money?" Obviously, the best outcome is being right and making money. That makes people feel good, right? But at the end of the day, like, why are you in the markets? To make money. If you want to be right, then go, I don't know, like go write some books or something, or do something else, because in the markets you're often going to be proven wrong, and the best traders are able to recognize that and be that, yesterday I thought this and this would happen, but today, the market has proven me wrong. Therefore, I was wrong. Okay, and I will take the other side, or I will go flat. Being humble, I think, is very, very important when it comes to approaching markets because you're dealing with your own money, right? Like you don't want to be too overconfident, or you don't want ego to get in the way of either wealth creation or wealth preservation. So this is one of the excerpts I want to share with you first. This underlying part, the best traders stay in the flow because they don't try to get anything from the market. They simply make themselves available so they can take advantage of whatever the market is offering at any given moment. I know some people that, they say, like, if you ask them like why they're traders or like why they're in the markets, they say that, I want to make money. I think I can be really good at this. And they say all these like blanket statements everyone says, right? But if you actually study their behavior, they're just gambling addicts, right? They're always leverage longing, leverage shorting every single day. But the best traders, like there will be periods where it's been like a month, but they don't take on a trade. Why? Because they don't think that the risk reward for, whatever trade that they're looking at is worth it. Just make yourselves available for all the opportunities and just pick up the free money when it exists. There's also like a famous quote that I don't have. It's called, it was written by XMNGR. I don't really know who this person is, but the best way to outperform is to just take 5 trades, right? The 5 best trades, pick up the money on the floor, and that's how you outperform, right? That's a pretty good mentality to have rather than trying to trade every single day. You don't have to, okay? Sometimes it's best to just take a break, refresh your brain, and just enter a trade when you have more clarity. And this is a pretty recent thing that I've done, but recently there's this if you're not like in crypto, then this is probably like kind of weird to you, but there's this asset called Stone, which is basically a staked version of Ether, right? It's done by Lido, it's staked ETH, and it's the most liquid liquid staking derivative out there on the market. And Stone, which is staked ETH, was trading at 0.908 ETH. And I was like, why is this happening? And I figured out that there are some degens out there that's literally selling Stone at a discount because they want to lever up their airdrop farming. And I'm not going to get into it because, I've talked about this in countless other videos, but certain market environment or market structure made it so that there are degens selling ETH at a 10% discount in order to chase some airdrop that has some, I guess, uncertain outcome. I looked at this and I was like, wait, I can literally take a bunch of my ETH stack and just increase my ETH stack by 10% because I'm buying, Stone at a 9% discount. So that's what I did, right? I literally picked up free money on the floor. And I mean, that's not a sexy trade. But if I continue to make these types of trades, then yes, in the over like the longer haul, I'm going to continue to make money. So that's like one example, right? Just by paying attention, just by being aware of all these market dynamics that people are like not really paying attention to, I just was able to increase my ETH stack by 10. Yeah, like all I have to do is wait 2 to 3 months to redeem my Stone into Ether because that's how the redemption mechanic works. Yes, it's not a sexy trade, but someone could have been like, like I'm just gonna take stable coins, dollars as collateral, borrow Ether, and then do this and just wait 2-3 months. And that, at the time of trade, like at the time of this trade, I think, if this gets back to par after 3 months, I think that's like a 50 to 70% APY on ETH. So if you're bullish ETH, then I mean this is free money. And Stone, I think right now is trading at 0.93. So I mean the opportunity is still there. You just have to pick up the free money on the floor, right? That's kind of one example. And then this is like one of my favorite excerpts in the book that I want to share. And the takeaway is that we are all variables in the market, right? I'm a variable in the market, right? I'm just some dude on the internet making videos whenever he feels like it. And sometimes I say things that, either make sense or it doesn't make sense. You personally, right? You're also some random dude on the internet watching some random dude on the internet trading internet coins or stocks. And, the collective behavior of all these individuals determine what happens to the market price in the short term. So here you go. There can be an extreme diversity of beliefs present in any given market in any given moment, making virtually anything possible. When we look at that market from this perspective, it's easy to see that every potential trader who is willing to express his belief about the future becomes a market variable. On a more personal level, this means that it only takes one other trader anywhere in the world to negate the positive potential of your trade. Put another way, it takes only one other trader to negate what you believe about what is high or what is low. That's all. Only one. All it takes is one person. And this is especially true in crypto because crypto is very, very illiquid. And if you look at the token supply of most of these altcoins, it really favors the team members, so sometimes the VCs, and sometimes, angel investors, right? Those like influencers that get those private deals. I say this way too many times. Like I have the liberty of understanding how all these like private sales work just because I'm an influencer. I personally, right, I'm one of the few influencers in crypto that don't do any private investments because I personally think that it's pretty unethical. But I have friends that have followers that do. And it's pretty crazy. Like literally people like invest into this like random coin. I'm not going to mention any tickers, but it's like, there's like no lockup. There's like a 6-month vest and the token is up 10x, right? And they're like, I have no idea why it's up, but I'm up like 300K. And then you go on Twitter and you have all these retail, like regular people like FOMOing to these trades because all these influencers are shilling it, or there's like some random narrative, right? And I look at that and be like what is going on here, right? And who knows, like maybe the token is actually good, like, who knows, right? But if you think about it, it's not just like this one guy that I know that has some insider allocation. It's probably like 10 or 20 dudes that have a bunch of followers that have this allocation. And they all don't have any lockups, and all they have to do is wait 6 months for it to vest. And it vests linearly, right? So, after a month, like 1/6 of the tokens are unlocked. Like all it takes is one person to be like, you know what? I want to buy a car, right? And they just like market dump, and then it destroys sentiment on that chart. It's kind of like that Mexican standoff, right? It's like, let's just say that there's like 10 influencers like on this trade. Like everyone is waiting for like the first person to sell, and then there's unsuspecting retail like piling into these coins. Right, like all it takes is one person, and like let's say these 10 people know each other, and one person defects, right? They just sell, then they all sell, right? And then like the entire thing's over. They all make money, and retail gets fleeced. It's similar to, I guess, Ohm, right? It's like the 3-3 meme. All it takes is like one big person to defect, right? If one big person sells, then it's over. And you kind of saw that because, we had 3-3 with Ohm, and then people levered up, like literally, and called it 9-9. And then one person got liquidated, and then it was literally down only from there. So, understanding this this fact makes you respect the market for what it is. You have to be humble, right? Because I mean, I own some tokens, and if one team member or one VC sells, then it might be down 10%, right? I could still be right in the fact that the fundamentals are good, but if the team member just needs money for whatever reason, right, whether it be personal, like health reasons, family, or like whatever, they're getting sued or who knows, right? It can just destroy that entire trade. You have to be humble. All it takes is one person. And I mean, this can work on the bullish side as well, right? Like for example, I was in the markets in 2020, and there were a lot of arguments around whether Bitcoin was bullish, right? We're gonna go down to 5K, like whatever. And then Paul Tudor Jones went on TV and said that Bitcoin is the fastest horse for like the debasement trade. This was May of 2020. And if you look at the Bitcoin price, it's literally up only from May. Sure, there was some minor corrections, but so this is from Paul Tudor Jones, like one of his investment notes, but it must compete with other sources of value. And what will be the winner in 10 years' time when it comes to comparing it with real estate, gold, land, whatever. And at the end of the day, the best profit maximizing strategy is to own the fastest horse. Just own the best performer and not get wed to an intellectual side that might lead you weeping in the performance thus because you thought you were smarter than the market. If I am forced to forecast, my bet is it will be Bitcoin. All it takes is one person, a really well-respected figure in Paul Tudor Jones, and then guess what, right? TradFi, institutions, they're like, wow, like if Paul Tudor Jones is buying Bitcoin, then I guess I will buy Bitcoin. And then it kind of creates this entire frenzy. Like literally maybe in April of 2020, maybe Bitcoin was actually bearish, right? Like maybe there were a lot more sellers than buyers. But hey, Paul Tudor Jones, all it takes is one person, and then bam, it's bullish, right? And I guess one example of like a meme coin is like this meme coin called Bald, right? So Brian Armstrong, the CEO of Coinbase, is very bald, right? His head is squeaky clean. I can probably use it as a mirror if I wanted to. And there's a meme that Coinbase is bullish because he's bald, right? And bald people make assets go up because Jeff Bezos, like whatever. And then there's like this meme coin on Base Chain, which is Coinbase's layer 2. And I mean, it literally pumped, right? And everyone was like, oh my God, like maybe Coinbase people are behind this. This is such a good meme because, Brian Armstrong is bald. Like, oh my goodness. I'm not even sure if you can see the price, so I'll kind of zoom out, right? Like, look at this, right? And then literally, like, the founder of this coin just rugged, right? All it takes is one person. And I mean, in theory, this is a pretty good meme, right? I mean, bald, right? I mean, that's pretty hilarious. But literally, like, the founder rug pulled, right? And he's out there somewhere, right? And a bunch of people lost a bunch of money. I know some people that like turned 10K into like 10 million and then just like got wrecked and like they're down to like $0. I mean, like, that's not really funny, but I mean, that's what happens. All it takes is one person. Yeah. Yeah, that's pretty hilarious to be honest. And there's also this interesting excerpt. So this is gonna be a pretty long one. So I'm not gonna read through everything. So if you want to read through some sections, please just pause it. But when I was reading this, I kind of laughed out loud. So basically the summary is a new analyst, right, with a bunch of strong college degrees. They're very smart, scored like high grades, or like 4.0 GPA, really good SAT score, like whatever, right? That type of people, right? That type of person got hired, and he was doing some technical analysis, and he was like, oh my God, like look at this line, right? Like look at it, this is support, it has to hold, it's so cheap here, right? That was kind of what he was doing for the soybean markets, so commodities, and he was having a discussion with his boss, I believe. So he was having a discussion with our boss, and the analyst was talking about, okay, like the bean market is coming down to this line, right? The support. It's like, okay, like in the past 3 times it's bounced, so this time it has to bounce. And then the boss, right, the chairman, looked over to the analyst and said, well, you said it's going to bounce at X dollars. This is where the market is supposed to stop and go higher, right? And the analyst responded, absolutely, right? Like, I'm so smart. Like, this has to happen. And then the chairman was like, that's bullshit, right? Like, fuck you. Like, that's bullshit. Like, watch this, right? He literally picked up the phone, called on one of his clerks, handling the orders for the soybean pit, and said, hey, like, sell 2 million beans at the market. And within 30 seconds after he placed the order, the price tanked, right? It literally nuked. And then, calmly he asked, now, where did you say the market was going to stop? If I can do that, anyone can, right? That's pretty interesting, right? If I can do that, anyone can. So you can have all this, TA or PE ratio or like whatever like analysis that you're doing, but all it takes is like some rich dude just saying, you know what, like fuck it, I'm gonna sell, right? Or even like resistance, right? Like maybe prices, like, I guess like being sold off at like X dollars for a particular coin, and you think that's heavy resistance. But all it takes is some rich guy saying, you know what, like I want to own like 1% of that token in my portfolio, and then it goes up like 30%. All it takes is like one person, right? A bearish analysis can be invalidated with one rich guy buying and improving sentiment, because when price goes up, everyone feels better, and then sometimes price goes up and traders pile in because momentum trading. Bullish analysis can be invalidated with one insider selling because they want to just cash in, like whatever, right? And that destroys sentiment. All it takes is one person. Just be humble, be very, very humble. And yeah, this is especially true in crypto. Maybe sometimes there's a main character on Twitter, and like this main character tweets out a ticker and it just goes up, right? Like that's kind of the meta. All it takes is one person. And then there's like I mentioned, there's a lot of influencer marketing. So I don't participate in this, but I mean, like 95% of people with followers, like they do this, right? So just be aware that that's happening, and think about it, right? Like 95% of tokens that like influencers show that they're being paid for, they don't really believe in the fundamentals, right? They just believe in the money that they're going to make. So at some point they're going to sell, and then they're not going to tweet about it ever again. The key is to be able to shift your bias in a dime if the facts change, right? Like if you're bullish, but there's like some big selling, then maybe it makes sense to be bearish. If you're bearish, but there's some big insider buying, then maybe don't be bearish, right? Just be able to be open-minded, think in probabilities. TA lines can work until they're not, right? That's something to be aware of. Yeah, I kind of talked about this. Yeah, that's kind of, yeah, so there's that. So, perhaps maybe, I don't know, some famous person, right? Like Bill Ackman or something, right? Like just hired 10 analysts and be like, you know what, like ETH and DeFi is overvalued for XYZ reasons. And everyone agrees. It's like, oh my God, like you're right, it's overvalued. And maybe that becomes sentiment, right? ETH BTC is going to go lower, yada, yada, yada. But like, what if, right? All it takes is one person. Like, what if Mark Cuban, who's been tweeting about ZKL2s, he's been rugged on Iron Finance, on Polygon last cycle, who's still really deep in crypto, maybe he wants to become the Michael Saylor of ETH, right? Like you have to think about these scenarios. Like you can be bearish all you want, right? And maybe ETH is bearish, but if Mark Cuban decides to just put $1 billion into Ether or like whatever he decides to do, then you have to be bullish, right? Not like, I'm not saying this is gonna happen, but this is one of those examples. It's like, what could happen, right? Like Michael Saylor being in Bitcoin is like pretty bullish Bitcoin, right? Because his entire personality is to like just lever his company to buy Bitcoin. And as long as it works, it's going to continue working. So, I mean, if something similar happens to Ether, then surely like, some similar phenomenon can happen. And think about it. A lot of ETH maxis, they don't like Michael Saylor because it's, not decentralized or whatever, like whatever the reason is. But if Mark Cuban buys $1 billion worth of Ether, then the ETH maxis are going to be like, wow, like Mark Cuban, he's a futurist, right? Like he's so smart, right? It's all about sentiment. It's all about what could happen, and then thinking in probabilities, and then reacting to the markets after XYZ things have happened. Rigid in our rules, flexible with expectations. So that's really, really important. So yeah, let's read about this. Read this underlined part. We need to be rigid in our rules so that we gain a sense of self-trust that can and will always protect us in an environment that has few, if any, boundaries. So this is talking about risk management. If you're a leverage trader, perp trader, maybe you say that if I'm 10%, if the price is 10% below my entry, I cut my losses, right? Just to have a stop loss. So you have to have some rules. But we need to be flexible in our expectations so we can perceive with the greatest degree of clarity and objectivity what the market is communicating to us from its perspective. So, this is somewhat close to, I guess, reading the tape, right? There's a saying, right? Don't fight the Fed and don't fight the tape, right? Don't fight the Fed as in if they're easing, then just like buy assets. If they're tightening, don't buy assets. And don't fight the tape as in if the tape, right? If the market price action is bullish, then there's probably a reason it's bullish, right? Like the market doesn't care about your opinion. Like the Bitcoin ETF, right? It's like, oh, like the Bitcoin ETF is not going to be approved. Maybe someone says that and that's their opinion. So they don't buy Bitcoin, but the market is telling you that it's going to be approved. So it's going to be approved, right? I mean, that's kind of like, sometimes the market is telling you some things because maybe you don't know about something, but there's a chance that a lot of other people with a lot more money than you probably know something. And that can just result in types of price action. And you have to be open-minded. You have to look, you have to read the tape and be like, you know what, like maybe I'm wrong, and just be really, really humble when it comes to crypto markets because it's so volatile, right? Um, so let's talk about the five fundamental rules of trading, as Douglas puts it. So one, anything can happen, right? All it takes is one person, and who knows? Like maybe some rich guy just buys your coin and it just goes up to 5x, even though that was not really part of your calculations. First, second, you don't need to know what is going to happen next in order to make money, right? Like who cares if like the Bitcoin ETF is all the news, right? Just buying buying Bitcoin 3 months before was pretty easy money, right? That's something that traders might say. Number three, there is a random distribution between wins and losses for any given sets of variables that define an edge. So you can have an edge, right? And it's been working 10 times, or it has like a 70% hit rate, and it might be great. But just because it has a high hit rate doesn't mean that it can't fail, right? The probability of, I guess, a system that's 70% right at all times, the probability of it being wrong twice in a row is 49%, right? 70% times 70%. And even though the probabilities are going to be low, like every time that get things wrong or something, it's like flipping a coin, right? It's like if you flip a fair coin and it lands heads 10 times in a row, it's still 50-50. That's kind of the idea. So just be understanding that, and it's like, I guess, like never go all in. And the edge is nothing more than an indication of a higher probability of one thing happening over another. So 90% of traders fail in the markets. That's a fact. But if you ask people, right, if there's a room of 100 traders, 90 of them are probably going to be losing money, right? Or at least they'll be underperforming. But if you ask them, like the 100 people, which one of you is in the 10% of traders, chances are they're all going to raise their hands, right? It's like, oh, like I'm so smart. That's why you have to trade your edge. Like you have to be able to define your edge. Like my edge is going to be different from your edge, and your edge is going to be different from someone else's edge. And like don't listen to people on the internet, right? That might be kind of weird because you're listening to this video, but like generally, right? It's like if you're bullish something and someone's bearish, like why do you care about this guy's opinion, right? Like chances are you spent more time working on that thesis or like your edge more than that guy. So always be able to define your edge, and all an edge like edge is literally just something that or some system that you have that gives you a higher probability of making money. It doesn't mean that you'll always make money, but just probabilities. 5, every moment in the market is unique. Just because people, it's weird, right? It's like every single time, like with crypto, right? People look at, okay, like 4 years ago, this happened. So this time around, it has to happen again. But like why does that have to happen, right? People talk about the 4-year cycle for Bitcoin, and it's kind of been playing out. So it's hard to argue against it. But like maybe this time around, the 4-year cycle isn't really going to be a thing, right? Just because an asset went up 10x last cycle doesn't mean that it's going to go up 10x this cycle. And just because it went down 80% last cycle doesn't mean it's going to go down 80%. People hate uncertainty. Humans hate uncertainty, right? So they often look at the past to be like, okay, like, so that they have some basis of, I guess, like grounding their, their assumptions. It's like, okay, well, if it went down 50% last time, then that could happen, and then it makes people feel better about themselves. But the reality is every moment in the market is unique. This cycle for crypto is probably going to look a lot different from last cycle. Okay, just be aware of that. So there's that. And then I like to talk about this just because, I was talking about this before the unlock and after the unlock. But whenever unlocks happen in crypto, so if you're not in crypto, it's like, teams create tokens, they work on it for a couple years, and then after they found product market fit, the team starts to get those tokens, team and investors, and then they can sell it if they want to. And as regular people like myself, like I have no idea if these unlocks are going to be sell the news or buy the news. And sometimes it gets priced in ahead of the market, because if people know that this is happening, then people don't buy before, they wait to buy, and then if people don't sell, then prices go up. Like who knows, right? Like there's a lot of uncertainty here. But like with the DYDX token, which I think is a strong team, good product market fit, makes money, etc. There was this huge unlock where the circulating supply was going to go up like 2x, which is like actually crazy. Right? Like, why did they do this? But the fact is, they did this. So like this is the fact. And when this was happening, there were so many people like on Twitter saying, okay, like I'm going to long because like I saw 2 people on my timeline saying that they are short. Therefore, everyone's short. So I'm going to long. First of all, that makes no sense. Okay. Like it just, you just happen to be following two people that are short. What are you doing? Or right, people are short because insiders will sell. It's like, oh, such a big unlock. Like, people are gonna sell. But like, how do you know people are gonna sell, right? Like, unless you know that people are gonna sell, then you shouldn't short. Unless you know that it's gonna be a bullish unlock, like you don't have to trade these things, right? Like, there's hundreds of other coins, hundreds of other instruments that you can buy or sell, but you choose to long or short this thing that has so much uncertainty, right? Like the variance on like this DYDX trade is crazy. So like why are you focusing on this? Like, there's probably better opportunities elsewhere. But like literally, I think the reason people trade these unlocks is because they have a gambling addiction, right? They want to feel something. They want to feel smarter than other people in the markets. So they just choose to trade because, like, if they're right, then they can just talk about how right they were on Twitter, and then they feel better about themselves. But the thing is, these are all random outcomes. And I think if you look at the price action of DYDX, so the unlock happened in early December, which is like roughly here, right? Like roughly here. The price pumped before, and then it like literally like retraced the entire move up after the unlock. Like, all you had to do was like buy Bitcoin, right? And like make more money than like trying to trade this thing. But people just choose to trade these big unlocks just because they have a gambling addiction. I literally think that's it, right? Like people that trade unlocks, like I don't really know like what they're doing, right? I just think that they just want dopamine, or maybe not gambling. It's like a dopamine addiction. But if you do have an edge, right? Like, if you know like a big bag holder of DYDX that is gonna sell at the unlock, right? If you have that edge, which increases the probability of your short being right, then yeah, you should short, right? But most people don't have that edge. So like, what the hell are you doing? There's gambling, and it's like random outcomes. This is literally a random outcome. It's literally flat from the date or like the point of pre-unlock. But I mean, imagine how many people like lost their money, right? DYDX holders like made no money, but traders, I'm sure like a bunch of people trading this like lost money, right? 90% of them. It's a losing game. But yeah, if you have insider info, then yeah, like, not insider info, but if you do have some edge, then yeah, maybe you can trade it. But like, gotta be humble there. So trading in the zone. So all you need to know when trading or investing is, or I guess like profitable trades is, let me back that. On the other hand, if you believe that all you need to know is, 1, the odds are in your favor before you put on a trade, 2, how much it's going to cost to find out if the trade is going to work, 3, you don't need to know what's going to happen next to make money on that trade, and 4, anything can happen, then how can the market make you wrong, right? The market isn't about being right or being wrong. It's about making money. Sometimes, being right is making money, and making money makes you right in the eyes of other people. But at the end of the day, it's all about making money. And you have to understand your edge, right? Because if you don't have an edge, then you're going to lose. That is a fact. And, following random influencers on internet, that's not your edge, because that is free and public information out there. And maybe there are people building algorithm like bots that literally buy a ticker whenever a big influencer tweets about it. And then, like 10 hours later, it's back to the original price. And then the unsuspecting retail that buy that token because of an influencer, just like lose money, and all the money goes to bots, right? And I mean, literally, that's the edge, right? People create bots because they know that there are people that will buy like these random tickers, and that's how they make money. But if you don't know that, then you're gonna just continue buying random tickers. But sometimes, random tickers, right? Buying them works, but it doesn't mean that you're smart, right? It doesn't mean that you have an edge. Maybe you were just lucky, right? You have to be able to distinguish when you were lucky, when you were unlucky, and that way, you have a better way of approaching the markets. But anyways, I think the takeaway here is that just be humble. Anything can happen, but the only reason for you to put on a trade is when you think you have a good reason to do so, and that reason has to have like a really, really good reason, right? There has to be some level of edge. And the best traders, right? They're objective. So there are people that have 5 winning trades in a row, and they become overconfident. Oh, like I won five trades, so the 6th one has to make money. But I mean, like, how do you know that you're not just like flipping heads and tails and you just flipped heads 5 times in a row? The probabilities of you making money on the next trade is still 50-50, right? And on the other hand, right, like maybe you just like flipped 5 tails in a row and you were unlucky, but it doesn't mean that you should stop trading. Okay, if you have a profitable system, if you're good and you have an edge at whatever you're doing, then just because you made money doesn't mean that it should affect your future decisions, and vice versa, right? Just because you lost money doesn't mean that you should be gun shy the next time around. Trading, investing is a very lonely game. It's very individualistic. It feels PvP, as in everyone is competing with other people. And that's probably true when it comes to short-term trading. And I'm self-aware enough to know that that's not really where my edge is. My edge is more medium to longer term, and just having or spotting narratives and spotting, I guess, like narratives and I guess capital flows before they actually happen. And if I'm wrong, I have to admit that I'm wrong. And if I'm right, then I have to keep pushing my edge, and maybe bet more if I have to. Just believe in yourself. So 7 principles of a consistent trader, as Douglas puts it. 1, I objectively identify my edges. 2, I predefined the risk of every trade, so having a stop loss. 3, I completely accept the risk, or I am willing to let go of the trade. 4, I act on my edges without reservation or hesitation. 5, I pay myself as the market makes money available to me. 6, I continually monitor my susceptibility for making errors, so biases. 7, I understand the absolute necessity of these principles of consistent success, and therefore I never violate them. These beliefs are the 7 principles of consistency. Just be humble, and you have to believe in yourself. There are people that are good analysts, but they are not good traders. They have good ideas about where assets should be valued, but as soon as they risk money on a trade, they just kind of, they can't deal with the volatility. And there are other people, right? There are people that are like just bad analysts, but they're good traders because they just have the sixth sense or like whatever skill that they have. You have to understand yourself. Otherwise, you don't really know like what the hell you're doing. And in order for you to be confident in your abilities, you have to have a reason to be confident, right? You can't just step into the arena and be like, I am confident, I will make money. I mean, that's not really how it works. So the only way to be really confident in your abilities is by just testing it over time, testing your system over time, and also, I guess, just being in the trenches for a very long time where you think you have an edge. And sometimes all it takes is confidence, right? Like sometimes, there are people that just like don't have the confidence and they just can't trade. But people in that camp should just go become an investor, right? Like that's fine. People that can't invest and don't really have like medium to longer term time horizons, then they should become traders. It's different types of games for different types of folks. But I think people that trade, they have this dream of just like making as much money as possible in a short period of time. But that's probably like a trap that people get into, right? That's kind of like gambling. But I mean, I don't want to discount all traders as gamblers. But I just like know so many traders in crypto that say they're traders, but they just like I just know that they have like gambling addictions. And like people get what they want out of the markets, right? That's also like a pretty good quote, not from this book, but sometimes like you see people and they're like what are they doing? Like why are they doing all these things? Like, do they really want to make money? And if you ask them, they do want to make money. But in reality, like what they're looking for from the markets is to just gamble, right? So if they punt $1,000 on a meme coin and it rugs, they say, they post angry things on Twitter. But in reality, like that's what they're looking for, right? They wanted to gamble. They wanted to lose money. They got what they want out of the markets, right? Pretty contrary opinion to like a lot of people, I think. But I think I've experienced or I've seen like so many people come and go that I think, it's fairly true. So let's talk about some personal takeaways. It really reinforced my beliefs that I need to define my edge and risk before I enter a trade. Some of my biggest losses is when I don't have like a stop loss and when I'm so caught up in my opinion being right. And also entering trades where the liquidity of that coin is like really, really poor. And now what I do is, I only enter trades if I feel like I have an edge, and I have to be able to define that edge. And because I am more medium to longer term driven, I'm not really trying to like make money every single day, a little bit here, a little bit there. I care more about, okay, like how can I just, have conviction, hold this coin and capture 2, 3, 4 X's over, let's say, a 3 to 6 month time horizon. That's personally my edge, and my edge is in deep research and just trying to identify trends before people are overlooking. Because people in crypto, they have really short attention spans. They can only look at the markets like 3 to 4 weeks in advance. I try to look at the markets, let's say 3 to 4 months in advance, so that I position and then 3 months go by, and then everyone focuses on like a coin because of like whatever narrative. But I'm like, hey, like I identified that 3 months ago, and now everyone's piling into the trade. Maybe that's when I start to de-risk, right? That's kind of how I think. And then I also have to be confident in adding to my winners if the thesis is strong. And I've done this many times before. So yeah, my edge is this. I don't care if I miss some meme coin or AI coin pumps because I don't really understand them, right? Trading or investing is like pretty cool because if you're playing baseball, there's the saying, hey, like wait for the perfect pitch, like right down the middle. But if you just take 3 strikes on the outside corner, then you're out, right? So you have to swing at some point. But in investing, you don't have to swing, right? You can literally watch 100 strikes go by, right? But you just have to wait for the ideal trade. So the only way to be punished as a trader is by buying something that goes down. I mean that's literally it, right? Like you can technically be punished by underperforming if you're just sitting in cash, but technically like you're not really down in USD. But maybe some people denominate in BTC and Ether and like or the S&P, and like that's fine. But trading is, if you think of trading like as a sport, as like in like a baseball analogy, then you don't have to catch everything, right? My edge is in DeFi, so I'm going to focus on DeFi. Like I literally don't care if someone else's makes 10x on like some meme coin. That meme coin was probably too illiquid for me to enter anyways, right? It's like whatever. By focusing on my DeFi picks or something related to DeFi that I think I have an edge on, I'm able to be in a Zen state of mind. One example is Maker. So this is not really a popular coin and it's underperformed like Solana, right? For example. But ever since I bought, I've outperformed BTC and Ether. And like I have a strong thesis for this coin. It's the most profitable company like application in crypto. $100 million in profits every single year. Pretty good coin, right? I put a third of my portfolio into Maker at 1,000, and now it's at 1,800. So yes, it's not that sexy, but I've outperformed Bitcoin. I've outperformed Ether. I don't think there's that much down. I don't want to show this coin too hard, but you kind of get the point. I have a thesis for this coin. And, I think that Q1 and Q2 will have catalysts, and I will probably sell into those catalysts, at least take partial profits. But, most people in crypto are not aware of those catalysts. The end game catalyst is because they don't really have time horizon past 48 hours. Another one is Canto. This is more suspect, and I'm not quite sure where this thesis is. You can read about my thesis here, but I bought it here and I bought on the way up. And now, it's kind of in do or die mode. It's part of the real world asset / yield bearing dollar trade that I've been touting on my channel for over 6 months at this point. And it's done well. But I'm not like married to the trade, right? I still think it can do well, but I have to be humble, right? It's like if the market tells me that I'm going to be wrong, then I have to, be okay with round tripping some of my profits, some of my gains. I have to be okay with that. So, still looking at this, but, I built a big position in this, still holding, and that's my edge, right? People are trading meme coins every single day, but I'm literally just like holding these like boomer assets. Maybe not so boomer, but in the eyes of a crypto legion, it's pretty boomer. And the other trade that I'm like pretty big on is staking Celestia and some Atom. And, Solana has done really well because of the comeback story, right? They survived FTX. Developers have continued to build during the bear, and they've just started having big airdrops to build a community and also build out liquidity. And I think something similar is happening with Cosmos, with Celestia as well. Cosmos, it survived UST, right? And Luna, that was a pretty big thing. People continue to build on Cosmos, and it has passed in huge airdrops coming by. So this is very illiquid because if I stake TIA, there's a 21-day unbound period where I have to wait 21 days to sell. So it's a very illiquid play, right? In the sense where, if that's your time horizon. But I expect that if I stake TIA, I'm going to get all these airdrops. So that's what I've done. And then recently I got this airdrop called Dimension. And at the current market pricing of this Dimension on several perp markets, I literally made back my initial cost of capital, right? So for example, if I spent $10,000 staking TIA, then I got like $10,000 worth of DYM tokens at least. And also like TIA is up a lot since I bought. So, that's a good trade. And this is my thesis and I'm not going to sell, right? Maybe I'm wrong, right? And if I'm wrong, then I'm going to eat a fat loss, but I'm okay with that because I built it. I've done a lot of research on this. I think it's a pretty good trade. You don't have to follow me. I mean, I've talked about this on my channel many, many times, so I'm not gonna, beat a dead horse. But yeah, it's a narrative. It's a narrative trade. It's also, like the airdrop trade, which I think will be a pretty big one this year. Just staying in my own lane, right? Unbothered, moisturized, happy, focused, flourishing. I don't care if I'm underperforming some leveraged meme coin traders. It happens, right? I don't care if I'm like not optimally positioned for the Bitcoin ETF or whatever ETF, whatever narrative, because I have my convictions, I have my bets, and I'm willing to see it through. That's my edge, right? Like my edge is deep research and then time horizon. That's my edge. But the thing is, I have to be open-minded, right? Like, for example, like maybe I'm wrong on this, and then like I'm posting about it now, but maybe a month from now, I just like completely pivoted for whatever reason, right? Like you have to be open to that. And you might be angry at me if I do that, but also like that's also the characteristics of a good trader. You have to be able to pivot, even if you have strong beliefs. Strong beliefs, loosely held. Same goes for Canto, same goes for Maker, right? I can be super bullish now, but I can just turn on a dime if certain things happen. What are those certain things? I have no idea, but I'm open-minded, right? There's that. So yeah, believe in my system, remain objective, and be open to changing bias. We are all variables in the market, right? Like literally, like a VC can like sell Tia or Maker or Canto, and like I can just be wrecked. But I'm aware of that risk, right? I'm not afraid. Well, I'm kind of afraid, but like you know what I mean. Yeah, all it takes is one person. A person, be rigid with rules, flexible with expectations, strong opinions, loosely held, have rules, but also know when to break those rules. That might be like a bad advice for most people, but that's also a quote I saw on another book, I think by Best Loser Wins. So that's gonna be it for me. Hopefully this was somewhat useful. Okay, it's 42. Okay, I thought this was gonna be like a 20-minute video, but I guess it's like 42 minutes. Okay, like whatever. I'll add timestamps. Thank you guys for watching. See you guys later this week or next week. And if you like the video, please let me know, like and subscribe, or whatever. Because if these videos don't get views and I guess positive feedback, then I'm less inclined to make them. Yeah, bye bye.